What is going on, everyone? We're back again with another video, and in today's video I wanted to make a brief explanation on determining your weekly bias and understanding the formation of the weekly candle. But before we get into the video, I am proud to announce my new partnered prop firm that I have been working with, Breakout. And here is a quick video of an explanation of who they are and what they have to offer. So to begin, in order to understand and determine the formation of the weekly candle, you want to analyze the economic calendar for that week. You want to know what days have no news, which days have news, and as you guys can see, this is the first week of the month for December, and every single Friday for the first week of the month, it's always NFP. And in NFP weeks, what you typically want to do is look for your setups early on in the week. And for me personally, when there's no news on Mondays, but Tuesday and Wednesday will be the days that I focus on because it is in the middle of the week and it is prior to NFP. Thursday is a day that I typically wouldn't trade because it is the day before NFP, and NFP is also a day that price action has large expansion moves. So my high probability trading days that offer the best setups usually would be Tuesday and Wednesday of that week of trading. Now, moving on to the dollar index. We're going to be starting off by looking at a monthly chart, and this is just a naked chart on the dollar index, just so that we have this depiction of price before I bring us into the annotations. And if you watched my previous video on external and internal range liquidity, determining your draw on liquidity, etc., that's a video you should watch definitely before this one, so I'll have the link to that in the description of this video, so make sure you go check that out before you watch this. But before I move into the next slide, I want you to look at this chart, identify where the internal range liquidity was, where the external range, and where we're sitting at now, and where could the potential draw be next. So moving on to the next slide with the annotations, as you can see, price ran these relative equal lows, which is our external range liquidity, and after we ran external range, we pushed up into this monthly bearish fair value gap, our internal range liquidity, which ran also these highs. So I created a monthly dealing range from this swing high to this swing low, and price retraced into this monthly bullish order block and into discount of the monthly dealing range. Now I'm going to drop down to a weekly chart, and from this weekly perspective, we're going to be using the same concepts like I labeled before, and we ran a weekly swing low. This is weekly external range liquidity, which is also the tag of our monthly bullish order block in discount of that monthly dealing range. So what do we expect after price runs external range liquidity? We expect it to retrace and push back up into internal range liquidity, which is this weekly bearish fair value gap. So this would be considered our draw on liquidity for that week. Now that we determined our weekly bias and we understand where the weekly candle is likely to draw to, we have a weekly key level that we ran, and now we move down to the 4-hour chart to understand the 4-hour structure of price. So what I did was, once price ran that weekly external range, we had price displace higher, and this was also on Friday of the previous week, creating a 4-hour bullish shift in market structure, and then price retraced down into discount of that 4-hour swing. And I have the buy side liquidity draw, that is the weekly bearish fair value gap resting here, and then I also have relative equal highs, which lies basically at the consequent encroachment of that weekly bearish fair value gap. So if price wanted to dig deeper inside of that weekly gap, I would expect it to run these relative equal highs as well. And if you look at it from a different perspective, this looks like original consolidation, and this would be a smart money reversal, the start of a market maker buy model. Now I dropped price down to an hourly chart, and I marked off the days of the week with dividers. So this is Monday, the day we did not trade, and here is Tuesday, Wednesday, and Thursday. This is Tuesday's price action that we're going to focus on, and I'm also going to give an in-depth analysis as to the trade that I took today, the 5th of December, on the US dollar Swiss franc. Now, given that we don't trade Mondays, I use Tuesday as the start of my week. And as you can see, these gaps here. So I already know that there's volume imbalances and new day opening gaps that I could see price be supported by. I also have labeled here the 10 a.m. news, high impact news drivers that will be used as our volatility injections into the marketplace. And as you can see, the high impact news at 10 a.m. was a driver for bullish dollar crosses towards our weekly bearish fair value gap draw on liquidity. Now, switching gears, showing you guys what I saw on the US dollar Swiss franc. I'm looking at my daily chart. And what did we do here? We ran external range liquidity, clearing this swing low. And after we took out the external range low, we had displacement higher. So I used that swing high to this swing low and measured premium and discount, and noticed that we have a daily bearish fair value gap in premium of the range right above equilibrium that could be used as a draw on liquidity for the week. Just like how we have our weekly bearish fair value gap draw as a draw on liquidity for the dollar index. So right now I'm making sure that my intermarket analysis is correlating properly with the pair that I'm going to execute my trade on. So dropping down to an hourly chart on US dollar Swiss franc, we have Monday's price action, and past 6 p.m. Eastern Standard Time is when the new candle forms for Tuesday. And that is when I enter my trade during Asia's session for my first entry for longs towards our daily bearish fair value gap internal range liquidity draw. But there's relative equal highs here, failure swings that are in discount of that daily dealing range. So these highs should be referenced as a low resistance liquidity run draw. Because again, like I said in my previous video, you always want to be looking to long in discount and sell in premium. So I'm looking to buy into premium of the daily dealing range. Now inside of this, we have a hourly bearish fair value gap that is treated as an inversion, and price was supporting inside. This is a 4-hour bullish fair value gap. We have internal stop hunts here that is being supported by price on the 4-hour gap and the inversion. And we have relative equal highs, another failure swing that could be used as a partial point or a draw on liquidity, which is what I used personally to take a chunk off of my position for the long that I entered during Asia. And as you could see, before news at 10 a.m., we ran the highs, so that was my partial point. And I did put my stop loss a little too tight here. I did put it below this swing low, and you'll see what happens in the next slide when news hits at 10 a.m. So 10 a.m. news comes and we rerun this low, so I got stopped out of the trade, but price did end up recovering because the 10 a.m. news was a drop. So that was a Judas swing to then engineer some more long positions and push again, continuing to eventually our draw on liquidity, which I believe will hit, if not Wednesday, Thursday, or Friday during NFP. But as you guys can clearly see, all I'm doing here is I'm utilizing the same concepts in my previous video, understanding external range liquidity and internal range. Where are we on the higher time frames, and where do we expect the weekly candle to expand to? And I'm not using any sophisticated terms. I'm literally just using old highs and lows and fair value gaps to determine where price is most likely going to draw to, or where that weekly candle will expand to, while at the same time utilizing the economic calendar to understand when the time is right for price to reach that exact liquidity pool. But this was just a quick and brief, easy explanation as to how I determine my weekly bias and how I give out my weekly outlooks to my Discord. They see it live every single week on Sundays I review with them, answer any questions that they have. So if you are interested in joining the group, I will leave a link in the description of this video. But if you have any other suggestions for future videos, please just drop them in the comments below. But be safe, everyone. And like always, I will see you guys again and talk to everyone for our next video on next Wednesday.